Welcome, welcome, welcome. I am Johnita Stanton. We have Reginald Perriman, Shaka Williams. We are TSARE, and this is the There's Something About Real Estate podcast where we talk all things real estate. And tonight we have with us from DFCU, Dan Syck.
Psych. What's going on, everybody?
What is DFCU? That sounds like a rap group.
It kind of is like Dearborn Federal Credit Union. It opened in 1950.
It might be.
Yeah, with 6 guys and $5 in a cigar box is what I read on Google.
Oh,
Oh, wow.
Yeah.
How many?
6 guys, and each one had a $5 bill and a cigar box. And next thing you know, we're 250,000 deep.
Oh,
Wow.
nice.
So give us a little bit about your background. How'd you get started? What's something unique and fun and exciting?
Well, let's see. I started doing mortgages around 2007.
Lucky you.
Yeah. So I jumped right in to the lava.
Right.
Fortunately, I made it out. It was at Shore Mortgage, which is,
I remember.
United
I did a lot
Wholesale.
with
Okay.
There was
Shore
like
Mortgage.
6 of us there.
Yeah.
And I learned how to swim real fast.
Yeah.
I did take like a year break. I was actually in school for nursing.
Okay.
And then I was like, I'm going to go back to mortgages.
Okay.
After 1 year, I was like, I'm good. So
Right.
then I worked at Rocket Mortgage for about 10 years. And then I been at DFCU for 2 years. So long time.
Right.
So that's crazy. You closed another one of our clients, Marie Bellissimo, our estate
for
sale
real?
girl.
Oh, yeah.
Oh, yeah.
I did.
So that was right around that time when you got there.
Yes, it was.
Oh, sweet.
Didn't even know.
Yeah. Prior to 2007, I was building houses.
Oh,
Yeah.
wow.
And my cousin was a realtor, and she was like, why don't you just sit behind the desk and do the paperwork, Like, I'm like, you know what? You got a good idea. I didn't think about that. So did a test,
Right.
passed it. Shore hired me, put me in a basement, put a headset on, start calling.
Right.
Wrote my first loan. It was $500,000 and made 25 grand in 4 weeks. And I was like, well,
This is it.
Oh,
this is
yeah.
it.
He was living the high life from the jump.
I'm like, man, wait a minute. What?
Right. That
Wow.
was better than building houses?
Better than building houses.
All right.
Okay. So, okay, before I move on, were you like the laborer in the build or the builder in the build?
A little bit of no, I did the labor too. Yeah.
Okay.
In fact, my first job was a 800 square foot house on my own parents' house. We did an addition on their house.
Right.
I mean, we built bathroom, master bedroom, like roof, everything, plumbing,
Wow.
electrical. I did it all on the fly.
Wow.
Yeah.
Okay.
With a buddy of mine.
Right.
But yeah, I learned that all through him, and we built for a couple years. Prior to that, crazy, I was driving a train, so I worked on the railroad.
So he rivaling Justin here now.
But that's
Right,
as crazy.
exactly.
That's as crazy as it gets. Railroad, building houses, mortgages.
Yeah.
Okay. Yeah. So we asked you here because we want to hear. Well, I was very interested in learning more about the physician's loan because I know it's not only for doctors, right? It's for you can
Dentist, physician. So dentists and physicians. That's our doctor mortgage, we'll call it. And then we have the gratitude loan, which is really the same mechanics. It's just 1% down, no PMI. So the physician loan is 0% down. And then the gratitude loan is 1% down, no PMI. The niche on those two is really we'll talk about gratitude first. So that's firefighters, police officers, first responders,
Okay.
and really anybody in the medical field, educators. What's crazy is you could say be a janitor and work for Henry Ford and still qualify as long as you're
Right.
getting paid through that entity, we'll call it.
Okay.
I just did a loan for a bus driver, but she got paid through the school district, so she could do 1% down, no PMI.
So as long as all right. So whether it's a janitor, bus driver, I don't know, anybody, but they're getting paid through that organization
through-
to qualify. Okay.
Yeah.
Secretary, assistant.
Yeah, as long
Okay.
as they're and it's how it benefits realtors too is it's for veterans, so it's a conventional loan, but you don't have to but it's for veterans, so you don't have to deal with a VA appraisal, right?
Right.
Or a giant, because they used the VA before, now they got a 3.25% funding fee or whatever it's pretty expensive.
Right.
I mean, you're talking. I've seen it where it's $10,000 cheaper to use our gratitude loan versus using a veteran loan. Unfortunately, but yeah, that's
Right.
truth.
What if they're like an EMT tech, like the EMS,
Yes. Yeah.
but they're getting paid through like a private company?
That's okay because EMT they're technically first responder health.
Okay.
Health. Yep. It would be like if you're a janitor for the city, right? That wouldn't work out. But
Right.
if you're EMT, no matter where you're at, private sector, public sector, you're good because you're in the healthcare.
Okay.
It's like Homes for Heroes.
Right.
Yeah. Correct.
Or
Yeah.
a good neighbor next door.
Can you have owned a house
Yes.
to qualify?
Yep. And here's the niche that we have. Like, there's a lot of niches, but so some companies do this. A lot of it's 740 credit score. Ours is only 700.
Okay.
A lot of times, like the bottom line is you can go up to 43% debt to income, but we can push it all the way up to 50% debt to income as long as we have a couple compensating factors, like maybe length on the job or
Right.
maybe a little money in the bank or something like that. But we just released it for second homes. So
Okay.
maybe, realtors that have past clients that could be teachers, nurses, physicians, and now you can go buy a vacation home for 1% or 0 to 1% down, no PMI.
Well, what's the distance?
I mean, it's just got to classify it as second home. So like
Right.
it can't be next door, or it's if say I'm sure underwriters are going to look at it and make sure it qualifies. But let's say it's maybe an hour away, but it's on a lake or whatever. It's as long as it's a second home vacation,
Right.
it's not a duplex where you're going to have families in there renting it out. You can get away with that,
Right. Sweet.
and it's in Florida too. So I've had realtors where they're like, "Hey, I got a teacher in Michigan
Right.
that maybe wants to buy a vacation home in Florida," and they will call a couple realtors in Florida and at least get a commission set up where they get that referral. 25% is usually what I see. I had a realtor at EXP that made 40 grand off referrals
Yeah.
last year.
Is there so do you have to own the house for a certain amount of time or keep the house for a certain amount of time?
No.
No. All right.
25% referral.
Mm-hmm.
Yeah, I get 25, 35%.
Yeah. So if you just call a couple agents in Florida because a lot of Michiganders, they want to move to
you're
Talking
talking
Florida.
about the
yeah, wait.
agent referral.
Yeah, no, he's talking about agent to agent referral.
Yeah.
Oh, you was thinking
I'm
about the
like, wait,
loan route.
hold
Oh,
on.
yeah. No, everybody's
You just got to cut me
going through it.
25%. You know what I'm
Yeah,
saying?
yeah.
We'll figure it
Right.
out.
Yeah.
Like, that sound like 2003.
So
Right.
I got a quick question. So there's always the lack of understanding between financing through a credit union versus a regular mortgage brokerage or a loan rep, or, a mortgage company,
Yes.
rather.
I think I know where you're going with it. So like
Right.
big banks, big lenders, they gotta
Right.
they gotta answer to Fannie Mae, Freddie Mac, FHA, VA on basically all of their loans, right?
Right.
Whereas a credit union where we have X amount of dollars set aside for funding where we can do portfolio deals.
Okay.
So like I just give you like one real example I just ran into last month where someone had a Chapter 7 bankruptcy. Nobody could lend on this person that answers to any of the big guys, right? Mm-hmm. But we had an explainable situation. I think it was medical. Something happened medical, and
Right.
they just, he had good credit prior, right?
Right.
Then you can see the blimp on the credit report,
Right.
the Chapter 7, reestablished his credit, and I think it was like, might have been 12 months out.
Okay.
you can't really reestablish your credit after like 3 months, but I think it was 12 months out. We did the loan.
Right.
So and it was actually a broker of mine that literally sent it to 10 different companies, and no one could do it because it's a Chapter 7 bankruptcy. It's a federal thing.
Right. Is that because so your underwriter requirements are a little bit more? Is it just based on what you guys are looking at, like based on the situation, case
by case,
versus following these other
There you go.
guidelines from a third party?
And that's what I love about DFC. Where I was at Shore and Rocket, it was just very robotic.
Okay.
Where our underwriters are actually the loan processors too. So like when we need something, the members don't know this, but the underwriter's actually calling the client and having a conversation with them.
Wait a minute.
That threw me off because I think that was going on with Maria,
Yeah.
with one of my other clients, and I'm like, makes no sense. I'm confused. And what are you talking about?
Yeah, it's a very personable
Okay.
experience where you're not talking to 10 different people all the way
Right.
down. It's just the loan officer, the loan coordinator, but again, aka underwriter is what they really are.
Right.
And then when it gets to closing, we do have a closer that handles, all the scheduling and the wire instructions and all that stuff. But
that's a DSCU thing, though.
Yeah, because I'm sitting here like, I don't know. I've had some credit union experiences.
A lot of credit unions suck, but what you're saying, y'all don't, doesn't sound like. But they don't even do their own loans. You know what I mean? They're serving everything out to another company, but that's good.
You're right.
A lot. This is almost like, is it? I mean, I'm trying to find out if this falls into the non-QM category.
They just call it a portfolio.
It's just a portfolio. It's just our money.
No, I get what you're saying, but it's still technically, so that, like you said, it's not necessarily falling under the federal guidelines. So technically, when I'm thinking about, okay, I got this client over here who may not qualify, and I need a non-QM product.
I mean, I hear what you're saying. It's just really the best way I can explain it. It's like he said, it's case by case.
So basically, what I'm hearing is, you guys got your own money and you lend it how you see fit.
There you go.
That's in the best interest of the company.
We're dealing with human beings at DFCU that can look at a file and
use common sense.
Common sense. Now there's some, sometimes we can't lend on, we hear you, but
but the risk is because I had, like Shaka said, I had some bad experiences with credit unions to the point where I was just like, you can try them if you want. That type of thing.
I will testify. Like when I was at Rocket, and I would talk to people like, "Oh, you're dealing with a credit union? Good luck. They're going to take 90 days." And then I came over to DFC, and I'm like, "What the heck? Like these guys are just." I mean, we've closed a loan in 2 weeks. I think our average is like 27 days right now, and it's insane. Like no, DFCU just. I don't think we have a lot of advertising. It's a lot of word of mouth. We were like the Ford credit union. Like everybody that worked at Ford was banked with DFCU because we were right next door. So now we're just expanding. We actually, because we can lend in Florida, it was just this year we merged with, I think it was First Citrus or Citrus Bank or something like that in Florida. So we have like 5-10 branches out in Florida right now. Oh, nice. So as we're growing, which means we're doing the right thing and lending to the right people, other people are closing down.
Okay.
So I want to go back to the physician's loan. Now, do veterinarians qualify for this stuff?
Yes, they do. So veterinarians would be a, actually, you know what? That's a great question. Now you caught me on that. You stumped me on that. I believe they do. Mm-hmm. I believe they do.
Okay. So we'll find out.
We'll find out. Hey, we'll come back to you on that one.
And then I just wanted to, talk a little bit about like how you qualify for the physician loan, like what's needed, basically, credit score.
So physician and gratitude, 700 credit score. Mm-hmm. DTI, the on paper is 43%. Again, with a couple compensating factors, we can go all the way up to 50. So physicians, we need the medical degree, doctor degree. Gratitude is really just you're a nurse. We do a verification of employment. I've done a lot of physician loans where they're still, in residencies and we have their contract, right?
Right.
So like they might be making 80 a year, but their contract 4 months, 6 months from now says they're going to be making 350. As long as it's within, I don't know the politically correct days, but it's 3 months out, I believe, 4 months out. Like we can do that loan. They can go under contract and buy a home.
So that's the big thing about this loan.
Yeah.
Like so people are understanding that you don't make that money yet, but they know you're getting ready to make the money.
Correct.
Right.
You have a contract.
Yeah, we don't need a pay stub, and you don't need to be on the job for 30 days. As long as we got the contract knowing that you're going to make it, we're all right. And so on all of our loans,
y'all need a baller's loan, so y'all can loan them money on draft night.
Right?
That's what it sounds like.
I mean,
you signed tonight. We know you're not gonna get the money yet.
That's
but
great.
Here's the loan.
Somebody lending them though. I mean, there's a bank doing that.
I've seen some.
They buying houses and everything.
I've seen some crazy loans out there. It's I think we were talking about the 12-month bank statement loan. I've seen that, and we're going live with new construction here in a few weeks. So that's our thing with Florida and new construction.
I mean, you got to start back building.
What's that?
You got to start back building.
Right.
Get the best of both worlds.
Yeah, that's very true. I'm curious to see how this is going to shake out because we haven't seen a whole lot of building going on.
Right.
And I think that's actually part of the problem right now is supply and demand. And I'm sure, you're running into this, there's just not a lot of inventory right now.
Right.
Builders are scared because ain't nobody about to go out there and develop a whole something and then rates increase and people stop buying. Now they stuck again like they were in 2000.
Right.
My philosophy is, so back in 2008, there was like a builder on every corner, right? I mean, you can go buy a new home, $1,000 down, work at Taco Bell. Here's $500,000, right?
I'm like HGTV.
So, but the main thing is there was a builder everywhere, right? Because they were getting money. They were getting money too, easy, right? Now there isn't a lot of building, right? And 15 years ago, those kids were, 20, whatever. My point is the population has multiplied. Like those young kids now got married and now they got 3 kids and those 3 kids are now trying to buy homes.
Right.
But nobody's built.
Right.
So now when someone lists a home, you got, 68 people looking at one home on an open house and you got 38 minutes to make a decision.
So when it comes to you guys are giving some rate discounts.
Yeah. So, with how we make smart decisions with lending, right? And it gives us a lot of leverage to keep our interest rates down. I've never, and I'm not going to say never ever, but rare occasions does someone come back and say, well, I found someone cheaper than DFCU. Because especially with that 0.5% cash back every January, and that's a real thing. That's not a, gift card somewhere, right? That's literally cash back that we deposit into somebody's bank account every January. So like if
in their bank account or their DFCU
in the
account?
DFCU bank account, because we got to have a tax ID bank account where we can kind of document hey, we did, pay you. But so like let's say the rate's 6.25, right? Well, really their rate's closer to 5.75 after that 0.5% kickback. And there's just no competition when it comes to when you factor that in.
Is it a max dollar amount?
I want to say they do cap it at like 10,000 for the year, but nobody's really paying 10,000 and half. I mean, you'd have to have a big loan to get 10,000 back.
Johnita.
Huh?
Talk to your client. No, so. Quick question.
No,
he
closed
Yeah, I know. That's what I said. They might be getting some money back, some nice money back. Let me ask you this. So, with credit union, so with DFCU, you have to be a member there to get these loans.
I'm a member.
She's a member. So the membership, and that's, it's funny because there is that stigma, I'm not a member at the credit union, right?
Right.
That's nothing. So like I do pre-approvals all the time for people that are not members. What it is when you go under contract and you finally have the home and
Right.
you're signing docs, in process, we allow that person to simply click on a link that's actually in my email and they just
Right.
open up a checking account, throw $20 in there.
Right.
There's no minimum balance you got to have. There's not a monthly maintenance fee.
Right.
$20 and it's your money. You want to pull 19 out after you throw $20 in there, that's
Right.
fine, but you're a member at that point.
And then when y'all give me back that money,
It goes
every
into that
January,
account.
It goes into that account.
Yeah, that's about probably more than half the reason why we have that account set up. It kind of kills two birds with one stone. So.
Right.
So these loans are adjustable rates. Mortgage.
Yes.
Yeah.
Yep. 10-year fixed mortgages. Because when you do a 30-year fix, you're really answering at that point to Fannie and Freddie because they can buy the loan. And there's so many pricing adjustments on those loans right now. Gratitude, physician loan or not, I would say 80%, 90% of our loans, I bet you, are written on ARMs right now.
Okay.
Because there are so many pricing adjustments on 30-year fixes. It's literally insane. It's just like, why?
So that's the caveat.
So the 10-year.
The ARM.
Yeah.
You're not.
In your opinion, are ARMs bad?
No. No, because I always play devil's advocate with a client like, okay, let's do a 30-year fix. Let's do your 3% down and let's pay $300 a month in PMI.
Right.
Okay. Well, now your APR is really 9% because of that PMI.
Right.
And at the end of the day, how ARMs work, it's not the subprime lending where, again, you could work at Taco Bell and go get a $500,000 mortgage at 1%. And then year one, year two, it's 18%, right? So they have caps on them.
Right.
And it doesn't adjust for 11 years. And it's based on your balance. So if your balance is a little bit less, or say the client does have a little cheddar in the bank, they could recast the loan for free, dump a little money on the balance. And if, let's say everybody's wrong and rates don't go down in 2 years and they just stay where they're at or maybe go up to 8%, right?
Right.
Usually
8% is scary.
Yeah, 8% is so scary. But then when you look at the numbers,
Right.
it's like a $200 a month difference on the payment, right? But you saved for 10 and a half years. You didn't pay PMI. You probably saved $5,000 in fees because you did the ARM.
Right.
And at the end of the day, in 10 years, you're more than likely going to be making more than $2,400 a year of what you make now.
So it depends. So what were your interest rate, your ARMs back in like 2020 when we were seeing sub 3% interest rates? What was your?
They were in that ballpark in the threes. Yeah, I know some lenders had them at like 4 or 5. Right? Is that what you're talking about?
No, I'm just I'm just trying to, because I'm saying that's where it would be bad. So if I was doing if I had a 30-year,
I would want a fixed rate at that point.
Yeah, that's what I'm saying.
Yep.
Yeah,
I would want a fixed rate right now. ARMs all day long, because in 2 or 3 years,
you don't know.
Rates are more than likely going to go down, and if they don't, it doesn't. Again,
stay in for the 10, 11
yeah.
years,
There's no doomsday that happens on those loans.
Right.
For those, those are
right. If you want the purple suit, we'll give you the purple suit, is what I tell clients. But
no, but I agree. So right now, what are your rates looking like on those ARMs?
they're great. I mean, they range between 5.75 and 6.25, 6.375 and 5.75 in that range, and then you get the 0.5% back on top of that.
Right. What are you doing for self-employed people?
So that's where our port deals can help out. So I'll give you another example where I ran into where I can't imagine a lot of people can lend on this type of scenario where had a really bad year,
right,
but justified, and then the following year was really good. Now, most banks and lenders got to average those 2 years out, which is going to chop the legs off. You're gonna cut the income in half. Whereas, again, as long as it's explainable, right, and we can see a bigger picture here, we can just kind of scrap that bad year and use the most recent year, and that helps out.
Okay, makes sense.
Yeah, so it's
but it's still a bank statement.
No, we don't do the bank statement.
Tax returns.
Just straight up tax returns, 1099s.
Right.
I mean, I've even had it on the gratitude where we had nurse that went like self-employed nurse, right?
Oh, under contract. Yeah.
Under contract,
Yeah.
and she was only on the job for 8 months.
Right.
And we made an exception on that, and we didn't use tax returns. So it
Wow.
is a case by case scenario.
Right.
It really is.
But you can see the length of the contract that played a part.
I can see the
into it,
length. I can see the consistent income for 8 months.
Right.
We know she's got a college degree as a nurse. Right. Nurses
She'll be
aren't
able to
going
find-
anywhere. Right. So those things are definitely explainable. Now, if you got a nurse and they don't, they got a 620 score and don't pay their bills, right? That's a different nurse.
Right.
So
It sounds almost like the loans are kind of common sense.
common sense,
Like
yeah.
this is low risk, this is high risk.
Right.
Yes or no?
Yes.
Right.
So, and when you're constantly lending on high risk, and we've seen this in 2008, eventually those banks,
Right.
they close their doors. And that's why DFCU has been around for, almost a century now.
Okay.
So I guess because I had on, I was thinking like I was having conversations like, oh, these loans aren't for the little people, but then you come back and you talk about the gratitude loan, and things like that. But I kind of think all the way around, I guess it's like perspective on what's the little people, because even if you have doctors who are just finishing, like you said, they're not making the money just yet. I mean, eventually they're gonna grow into their wealth and things like that, but it's still helping families.
It even the bus driver.
Yeah.
Right.
And the janitor.
Even the bus driver, even the janitor.
Right.
Like they work for a good school system or a good healthcare system. Like their job isn't more than likely going anywhere. We're going to need bus drivers for a while.
Right.
Yeah.
Hopefully.
Hopefully.
Well,
Tesla.
but they're making them, they're privatizing them now. So you guys wouldn't do that for a privatized bus driver.
That's probably where you're going to run into some speed bumps. Yeah.
Right.
So, how do bridge loans typically help individuals out?
Yeah. So bridge loans are great. Basically, it really is good for the realtor, especially. It's the non-contingency. So, like these days, with how much competition is on a house, when you competing with 10 offers, soon as you see, contingent on, Bob's house selling, like your offer's going to the back of the line. So a bridge loan, what it is let's say someone owes $100,000 on their house, values 180, and they're buying a $300,000 house. We can take their 20% down.
Right.
If they're not gratitude, physician, dentist, whatever, we can do 20% down and use that. And 20% down is not mandatory. We can do 5% bridge loan, right?
Right.
But I'm just saying, if they got enough equity, you might as well avoid PMI. So we'll do 20% down in that scenario. And it's basically a home equity line of credit on their primary home.
Right.
And we use that as a down payment to go buy their new home without touching a dollar in their bank account. And then when they sell their home, we pay off that loan.
Right.
Does it still count towards their debt? So does that loan still count towards the new DTI?
It does, but it's an interest-only payment, so it's very minimal.
Right.
And it is a case-by-case scenario. I've even done scenarios where it was like the ratios were actually a little bit higher than what they were supposed to be, but we get a letter of explanation to whom it may concern. We are going to be selling this home, and then we can kind of, case-by-case, strong client will...
And you're not necessarily loaning. So if they have $80,000 in equity and they don't need $80,000, you're not trying to loan them.
No.
Just enough for the down payment.
Just enough, whatever they're comfortable with. They want to do 3% down. They want to do 20% down. That's their shot. I'll give them the options, and it's their call. Typically, you do want to do, if you do have 20%, you want to do that because PMI is not always guaranteed to get removed. Soon as you sell your house and dump it on, the PMI company can still say, hey, we're going to charge you for a year.
Right.
What states are you lending in?
Right now, just Michigan and Florida.
Okay.
Yeah. Okay. And that's why I love DFCU, because we're not bone jockeys just sitting on the phone all day. It's just, we can help realtors out. We can help market. So Michigan and Florida, and I would not want anything else. Because I used to have 30 licenses at Rocket. It wasn't fun.
It's a chance somebody gonna talk to the underwriter, like the borrower.
Yeah.
Somebody.
I've never even spoken with an underwriter in all this time.
Right.
But
wait a minute. Let me take that back. That could be good or bad.
Yeah.
She said the wrong thing.
Like, I swear, I was arguing with the one, like, there's no way you were talking to the underwriter.
Right.
She was like, no.
That's why I've been needing to talk to is the underwriter, though. So the underwriter can make, you know what I mean? Because like you said, you're explaining it to them versus, I mean,
there's no monkey in the middle.
Yeah.
Right.
They're telling the client straight up what we need. But when you got, client care specialist and then some assistant, and by the time it gets to the client, they're sending stuff that I don't even know what they're sending. So
I think you're talking about some straight up. The one company, yep.
Yeah.
But the thing I don't like about all the middlemen, and it's not just towards one company, some of those people, I would say like 80% of them people never bought a house.
Mm-hmm. Right.
So they don't even comprehend why this is important or why this is not important, and they're just shuffling papers.
They're just reading off a script, and I think knowing the why is so important as being a human being. I want to know why about this and that. As long as we understand it, I think it's we have a little bit more motivation to do whatever we need to do because we understand the why.
Right.
I think that's the biggest issue. People so this works for people that know how to put together deals. People nowadays don't know how to structure deals.
They're
you know what I mean? Like, I'm talking about the realtor. Man, I'm dealing with a situation right now. It's just like I'm talking to the other lender. I mean, the lender and the doggone realtor. And I'm like, neither one of y'all know what y'all doing.
Just
that's
stop
the
and
problem.
let me do it.
You know what I mean?
That's
Like, bro, I got to do both 3 jobs. I'm just the realtor. You know what I mean? Like on the sales side. Now I got to do your job on the buy side, and I got to do your job as the loan officer because you don't know what you're doing.
Right.
So it seems like that's what they're doing. Like you can go to them and actually structure real deals.
Yeah.
And they're different. You can put these products together in a way to get the deal done.
Right. Yes.
Yeah, I didn't talk to Dad until the closing day. For real.
The biggest disappointment I had with a credit union was because we had a client that was pre-approved, out looking at homes for like 6 or 7 months. This was like in the thick of it. Finally got him a property, offer accepted, and then they came back and was like, "Oh, we can't do this long because he's a seasonal employee." And I'm like, "You didn't know that several months ago."
No.
So
I'm gonna tell you guys straight up, DFCU does not mess around when they issue an approval letter.
Okay.
Kind of like sometimes annoying on my end where I'm like, they qualify, just come on,
Right.
But nope. If they need something, they need. So that's the beauty though. So when we issue a pre-approval letter, that thing's as good as cash.
Right.
And that's like our brand. Like we want our approval letters as good as a cash buyer right now.
Right.
And they've always been like that. So
do you have any loans under 700 credit score?
Oh yeah, I do them all the time.
Okay.
Yeah.
All right.
Yeah, it's just our gratitude, the 1% down, no PMI.
Okay,
yeah.
Okay.
Because the PMI companies essentially kind of have to sign off on that stuff. But we do conventional 3% down.
Right.
But yeah,
What's the lowest credit score you've done lately?
Closed. Probably, I want to say around. I think 620 was the lowest because a lot of the gratitude, they all, like, for example, if you work for the Border Patrol, you have to maintain a minimum credit score of 700 to even work there.
Right.
Oh.
Damn, what you getting no payoff.
Yeah.
And there's like, I don't know if I'm adding a zero or not. I don't know if there's 7,000 or 70,000. I think it's 7,000 agents in Michigan.
Okay.
Those are 7,000 people with a 700 credit score that qualify for the gratitude program.
Okay, I'm going to take a ride past.
Right. Second home. What are you?
Mm-hmm.
So I want to, before we wrap it up, I want to talk a little bit about the rehabilitation loan. Did that roll out this coming week or something, right?
The new construction.
New construction.
That's coming out in a few weeks. So they're working out. It's software bugs in the system, but that will be coming out. So
are you able to talk about it or no?
I don't know all the details. I just know it's straight up new construction. So from the ground up.
Right.
So what I want to know is, okay, so Shock is my business partner. He's a builder. can I go buy some land and then come to DFCU and get a loan to build the house?
My knowledge is yes. And I think the land would count as equity. That's typically how new construction will work, unless they got some crazy, thing going on. But yeah, my understanding is, you can, it's ground up. So land, house, yeah.
When you say it counts as equity, what do you mean?
I
already put money down.
Right. Yeah.
Right.
If
like
the
I already
land's
put
free
money.
and clear,
You have an asset.
it's an asset.
Right, but like I already put money down. Like, does that go toward my down?
My understanding is that would be yes. That's
Okay.
my understanding.
And then we were talking about this a little bit over the phone briefly. Did you combine that with the physician's loan for somehow? Like
The new construction?
Yeah.
That I don't know.
Okay.
I would assume it would come into play, like physician loan. Hey, you're a physician, but new construction can be weird because you're doing a draw. You're paying the Bob the plumber. You're paying I don't.
You were excited. You seemed to be like excited about it. Was it just because it was like a new product, or was there something different about this from like some
we
other
do
bank?
have a lot of builders like waiting on the side. Like people are. I think we're gonna see a bounce in building. I think we're gonna see a hike in building.
Okay.
Okay.
All right.
So yeah, if we can lend and people trust DFCU and we can give the money and make it a seamless process, then yeah. And I think also people have been sitting on the sidelines for a while, like waiting for interest rates to drop, right? Waiting for the crash.
Right.
But it's probably not going to happen, right?
Right.
And you got supply and demand is the biggest thing. Unless you're going to stay in mommy and daddy's basement, right? Or throw away money and rent money in your apartment, right?
Mm-hmm.
Like people are starting to come out of the basement and out of the woods, and at least looking.
Yeah.
You know what I tell people that's waiting for the crash? If we really crash, you might not be able to buy a house anyway.
Right.
Because that means something else happened in the market with the economy that who knows if you're even going to have a job then, right?
I always say if it goes down this time, we're all in the Titanic together. Go find the violin player. We'll all hang out with him, and we'll just ride it down.
It's a war.
Now, let me tell you something.
Yeah.
I ain't going out like that. All right.
One more question. On the self-employed borrower, you need the tax returns. You're not doing bank statement loans.
Correct.
But do you also need a P&L, year-to-date P&L?
My knowledge is that got canceled.
Okay.
We no longer need that.
Okay.
I think it was like they used to require, I think it was due to COVID, some, making sure you're still getting a paycheck and working, but they required 3 months of bank statements from the business.
Right.
And then the P&L. The P&L went away. If the bank statements are still required, I think it's kind of like a less looked at item now, where before it was like, you're missing $1,000 this month. What happened?
Right. What if they have multiple businesses?
It's
just need this from each business.
Really, you're just gonna, you're gonna get put through the ringer.
You're gonna get on there with that underwriter and make it make sense.
Yeah,
Right.
yeah.
Okay.
That's when I give you the underwriter's phone number and I let you.
Yeah.
Okay, Dan. Where can we find you at? How do people contact you?
You guys can go to really just Google Dan Syck, SYCK, DFCU, and you'll find me on there.
Okay.
You can call me.
Syck
I don't
with
care.
an I or with a Y?
It's a Y. Y is in yellow. SYCK or 734-775-9688.
All right.
No Chewbacca voicemail.
That was hilarious. But yeah, we need everybody to like, follow, subscribe, press the button.
All
That's
right.
a wrap.
That's a wrap.
Thank you.
Well,